I want to welcome everybody to a call here. My name is Eric Carter. I'm actually calling you from my Seattle office here in Washington. We have a lot of people across Washington and also across the United States. I have invited a lot of different clients from different states that needed to hear this as well. This information is going to be mostly pertaining to the current Washington state law that's going to be implemented by the end of this year. But we have found out that states such as California, Minnesota, Oregon, and among others are actually going to be implementing this same exact law. So we're going to be going over this law real quick, along with long-term care options to actually opt out of this law. A little bit about me. This picture here, this is myself and the lovely Mary Jane, my wife. We live here in Seattle, but we have multiple connections in multiple states. And I've actually been in the industry for 23 years. 23 years experience here in the industry with the same company, and licensed with insurance, health insurance, life insurance, long-term care, along with mutual funds and 401ks. So 23 years experience. And let me just say this, people, in 23 years, not once have I ever seen a law that is being implemented that is tremendously cumbersome and also tremendously disadvantageous to individuals. It's a good tax, don't get me wrong, but to individuals, this is not a very good tax to actually have implemented to your wages. All right, so let's get to it here real quick. Time is money, and I know you guys have a lot of different things going on in your life, and I appreciate you getting on, but this would be really good information for you to be able to know. And we'll be actually doing this seminar every other week. We're going to do a seminar every other week until the law is implemented. All right, thank you very much. So here we go. Now, so the Washington Cares Fund. Okay, so the Washington Cares Fund, ensuring all Washingtonians have access to affordable long-term care when they need it. So this is what they've been calling it. By the way, originally it was called the Washington State Long-Term Care Trust Act. That didn't sound too marketable. So what they did instead to market it, they're actually calling it the Cares Fund to make it sound better. All right, what is the Cares Fund? All right, so pay attention to this here real quick, you guys. It's first of the kind in the nation, okay? So Washington is spearheading this effort. And again, a lot of other states are falling into place as well, all right? Signed by Governor Jay Inslee in 2019, July of 2019. So these are the actual laws. So maybe make sure you write these down or take pictures of it, okay? It is designed, this law is designed to reduce the burden of Medicaid to fund long-term care services. That's what this law was intention, and the intention of this law was to do, okay? It's support for family members providing care and function as a state-funded via mandatory payroll tax long-term care trust, okay? So this is going to be a mandatory tax, all right? And it's going to be done through payroll of the employer. So if you're a small business owner and you have W-2 employees that work for you, okay? This is going to be yet another tax through payroll that the employee will have to be paying with their wages. Okay, so this is a state-funded via mandatory payroll tax long-term care trust. All right, so it is it is what's happening right now. What is long-term care? Okay, by the way, this long-term care law is not Medicaid. It is not through health insurance. It is a separate and it's a separate thing. It's a totally separate long-term care insurance, okay? Long-term care is like a short-term care. So the different long-term cares, by the way. Short-term care is a type of treatment that has a defined outcome, okay? For example, treatment for like an injury, an automobile accident, breaking a leg and you can't work, you can't help yourself. Something like that would be considered short-term care. So usually it's like for a few days or maybe a few months. Okay, that's short-term care. All right. Long-term care is a type of treatment for those suffering from chronic disease or other debilitating medical condition. For example, suffering from a stroke may require long-term care, all right, which is more of a permanent need for a lot of different people. All right, we all know somebody who is either currently in long-term care or on their way into long-term care, or somebody who was in long-term care and they're no longer with us. Okay, we all know somebody who had to have some sort of long-term care coverage and some sort of long-term care services, I should say. All right. So long-term care relating to activities of daily living, daily living. Okay. Traditionally, there are 6 ADLs. Okay. One is bathing, dressing, grooming, toileting, eating, and moving around. Okay. So if anybody has any kind of trouble helping themselves doing these 6 things, or any one of these 6 things, usually needs some sort of long-term care, which costs money. Okay. And sometimes it costs a lot of money. We'll get to that here as well. Okay. Especially here in the West Coast, long-term care does cost a lot of money. All right. By the way, 70% of us over the age of 65 at one time or another will need some form of long-term care. Okay. It is inevitable. 70% of us at one time or another over the age of 65 will need some form of long-term care, whether it's a day, a week, a month, or a year or longer. Okay. 70% of us. So the majority of us will need some sort of long-term care. All right. How does the Washington Cares Fund work? Let's look into it right now. This is crazy. So pay attention. It works like Social Security, where everybody pays based upon income. However, everybody receives the same benefit. Okay. So as an example, there's going to be a 0.58% mandatory payroll tax for all W-2 workers. Okay. Mandatory. So $100,000 a year in income equals $580 in annual tax towards this long-term cares fund. All right. A $20,000 a year income will equal $116 annual tax towards the long-term cares fund, Washington State Long-Term Cares Fund. A lot of people will say, well, that's not bad. $580. That's not bad at all to get long-term care. Or $116, that's not bad at all. Okay. Well, there's a catch. You get the same $36,500 benefit. Okay. Whether you make $100,000 a year or $20,000 a year, this is the payment. Okay. For the income, but you get the same $36,500 benefit. All right. In addition, the tax is scheduled to start January 1st, 2022. The total lifetime benefit is only $36,500. But the total benefit does not increase, and the payroll tax continues after the cumulative benefit amount is reached. So once somebody reaches $36,500 that they've been taxed, okay, they will still continue to be taxed even though their benefit's going to be capped. So the benefit is capped, but the tax isn't. Okay. And by the way, I sat down and had lunch today with a younger gentleman, and they do not know that even at 18, if they're a W-2 worker, they're going to be contributing to this tax, whether they think they're going to need long-term care or not. All right. And at the age of 18, if they're taxed the way it's scheduled to be, they're going to be capped on the benefit. Okay. But they're not going to be capped on the tax ever. Okay. So that's one downfall. Okay, the first benefits will be available January 1st, 2025. So the tax will start January 1st, 2022, and the first benefits will be available January 1st, 2025. All right, but this one here really gets a lot of people, but there's even more cumbersome rules to this tax, okay? Several exemptions exist. So current exemptions are federally recognized tribes, people filing for 1099 for taxes. Okay, so business owners, small business owners, I should say, filing 1099 for taxes. People currently retired will not have to pay this tax. People with private long-term care insurance in force before November 1st, 2021 will actually be exempt from this tax. We'll get to that here in a minute. So people who have their own private long-term care insurance that's in force before November 1st, okay, and it has to be in force before that date in order for them to be able to exempt themselves from the tax, all right? Everybody in the above list, other than retired people, can make a one-time irrevocable opt-in. So you could opt into the tax if you are in any of these categories, except for retired people, okay? But then once you opt in, you cannot opt out, okay? That goes for the same for people who don't have in-force long-term care, private long-term care by November 1st. Once November 1st comes and goes, if somebody doesn't have their own private long-term care insurance, they're going to be opted in and they can never opt out, even after they get their long-term care, their personal long-term care. Okay. So once somebody is enrolled in the tax, they can never get out of the tax unless they have their own long-term care before November 1st. Okay. So there's a hard deadline for somebody who wants to avoid this tax. All right. Look at this. Residents in other states, such as California, Oregon, Idaho, wherever, who earn an income in Washington state. So there's a lot of people who have business interests, okay, in Washington, but they live in other states, okay? They'll be subject to the tax, but not be eligible to receive benefits unless they move to Washington. So a very good example. Down in Oregon, in the Portland area, okay, right across the bridge is Washington, okay? There's a lot of people who live in Oregon, but work in Washington, okay? They won't be eligible for benefits unless they move to Washington, all right? If somebody lives in California, but they have businesses in Washington, okay? And they earn an income, or they have a job that's out of Washington and they earn an income, all right, they will be taxed, but they will not receive the benefit. All right. Washington residents who move out of the state for 5 or more years forfeit their benefits and the premiums paid. Okay. So if you've been taxed 30, 40, 50 grand in the state of Washington towards this long-term cares fund, and you move to Idaho or you retire to Texas or wherever people are moving to right now, okay, they forfeit their benefits and the tax premiums that have been paid, okay? The government confiscates that. They take it back and put it into their coffers, all right? So those things right there, a lot of people are very upset. By the way, this goes across all political spectrums and ideologies. A lot of people, no matter how they vote, are not liking this tax, okay? But what's happening is forcing them to actually bring this to the forefront, all right? Let's look at the numbers. Currently, get this, and this is going to make you mad, and then pay attention. Currently, Washington State will spend approximately $4 billion a year on Medicaid-funded long-term care by 2030. $4 billion a year on Medicaid by 2030, okay? By 2030, the CARES Fund is projected to save approximately $12 million a year of the Medicaid budget. So they're looking to save 12 million a year, only 12 million a year. 12 million is 12 million, don't get me wrong, but when it comes to state budgets, 12 million is a drop in the bucket, okay? But look at this. They're going to save 12 million a year, but the administrative cost is going to be 89 million. So they're spending 89 million to save 12 million, okay? So nothing like state-run long-term care. The Washington Cares Fund is expected to collect approximately $1 billion a year in taxes and will save Washington State approximately $12 million a year by diverting the cost of Medicaid-funded long-term care and putting that burden on the taxpayer instead. Okay? So saving $12 million, spending $89 million, all right, to actually just run the fund, but all these other burdensome rules that I went over right there that comes with it. Okay. So this is not looking very good. How to receive benefits from the long-term care fund, the Washington Cares Fund. To receive benefits, you must have contributed at least 10 years without a break of 5 or more years, or 3 of the past 6 years and have a need for assistance. Okay. So if somebody, they get sick now this year after they enrolled in the tax, they don't get benefits. Okay. They have to be vested for 10 years or at least 3 of the past 6 years and have an actual need for assistance. Okay. So the benefit's not immediate. You have to pay into it for a certain period of time before you're allowed to actually get any benefits. All right. You have to work a minimum of 500 hours per year. All right. So for retired folks, all right, people who are already retired, this is not going to affect them much. All right. But for people who are still working, this is going to affect everybody on a W-2 tremendously. All right. Now, 3 of the 10 activities in order to receive benefits. Okay. In order to receive state benefits, you have to have 3 of the 10 activities of daily living, okay? So medication management, personal hygiene, eating, toileting, transferring, body care, bathing, mobility, dressing, and cognitive impairment, okay? So in order for you as a taxpayer with the taxpayer, benefits, okay, you have to have 3 out of 10 daily activities to qualify. And you have to be vested for 10 years or work at least 3 out of the 6 years if you have a need for assistance. All right. Now let's look at the costs. The cost of long-term care. The cost of long-term care in the state of Washington. All right. The median cost for the Seattle area in 2020, this doesn't include 2021. For homemaker services, it's $80,000 a year, just for homemaker services. For home health aid, it's $80,000. All right. For adult daycare, it's $24,000. Assisted living facilities, $81,000. For a semi-private room, all right, semi-private room here, it's $127,000. And for a private room, it's $143,000 a year. Okay. Now let's look at what's going to cost with inflation, because everything goes up with inflation. All right. With inflation, it goes from $80,000 to $107,000. Okay. Adult daycare goes from $24,000 to $32,000. Assisted living facilities, $81,000 to $108,000. A semi-private room goes from $127,000 to $171,000. This is by 2030, $143,000 to $192,000. So you see how inflation is working against the person who is paying for long-term care. Look at this. At 2040, look at the prices now. At 2040, $259,000 a year for a private room, $230,000 a year for a semi-private room. Okay, $146,000 a year for assisted living facility. Okay. And look at this, in 30 years, how much it will cost 30 years from now For those of us who are still working in 30 years, this is how much long-term care is going to cost per year in 2030. Okay? A lot of money. A lot of money. All right? Get this. This is actually in the bill. And this is kind of fuzzy math here. The average Aging and Long-Term Supports Administration Medicaid consumer utilizes 96 hours of care per month. 96. At current costs, a $100 per day benefit for 365 days will provide complete financial relief for the average income and home care consumer and substantial relief for the average facility care consumer for a full year or more. But folks, I just showed you the cost. How is this 143,000 in today's dollars, 192,000 in 2030, 259,240 or at 2040, or 348,000 at 2050? How does that equate to this right here? The math doesn't add up. Okay, the math just simply does not add up. All right. Well, let's look at if CARES is a good deal. All right. Let's just look at and you decide for yourself. Okay. Approximately 75% of state W-2 wage earners could get better coverage for less from the private market. This is according to the outside actuarial firm contracted by the state to review the WA CARES Fund. So this is a lot of words here for my simple mouth, but according to the outside actuarial firm contracted by the state to review the Washington CARES Fund. So 75% of current state W-2 wage earners could get better coverage for less in the private market. So 75% of you guys listening to my voice right now, okay, can get better coverage for a cheaper price. All right. And this was based solely on price, by the way, not on benefits, just on price alone. The CARES Fund cannot provide the following benefits that private long-term care coverage can. Private long-term care coverage can actually provide benefits and portability outside Washington. So somebody is living in Washington now and they move to a different state, their private long-term care insurance will follow them. If they have only the Washington state long-term care, those benefits do not follow you to a different state. You actually have coverage outside the United States. We have a lot of foreign national clients. We have a lot of clients who plan on working here but retiring to different countries. With private long-term care, they can actually take it to different countries. All right. We have long-term care that we offer that as long as you are certified to need long-term care by an American certified doctor, you will get long-term care no matter where you are. Okay. There is also inflation protection that is greater or less than the consumer price index. Okay. There is elimination period options. So you could wait to get benefits or you can make benefits immediate. Okay. There's ability to cover partners and spouses with private long-term care. There's ability to cover retirees and non-working applicants with long-term care. All right. And also you could get cash benefits by having private long-term care. All right. So that means you could actually get return of premium if you don't use it. If you don't use long-term care, you could actually use it for other things such as a death benefit or retirement purposes. Okay. So return of premium is one, okay, and shared care, all right, partnership protection, and many, many more, okay? The total lifetime benefit of the CARES Fund is only $36,500, okay? But the daily benefit of $100 will increase at a rate no greater than the Washington Consumer Price Index. And each year, an 8-person council will vote whether to increase or decrease the benefit to assure solvency. So they're never going to let this go insolvent which means you could be taxed, okay, but they can increase or decrease the benefit as they see fit, okay? So the $36,500 is not a fixed amount of benefit. It can increase or decrease to keep solvency, okay? So you see how cumbersome it can be. All right. Where does the care fund come from? Well, formerly known as Washington State Long-Term Care Trust Act. The CARES Fund was not voted on. A lot of people will say, well, I didn't vote for this. Doesn't matter. It was not voted on, okay? They're still doing it. They found a loophole. I don't know what they did, but they found a loophole. They're still doing this tax, even though it was not voted on by the people. During the general election of November 2019, the advisory vote number 20 stated, the legislature imposed without a vote of the people an additional wage premium for long-term care costing an intermediate amount in the first 10 years for government spending. The question on the ballot was, should this tax increase be repealed or maintained? Okay. What do you think the majority of people voted on? With every county except King County, every county voted to repeal the tax. So 38 out of 39 counties voted to repeal this tax. Well, guess what? The stakeholders and legislatures, the authors of the CARES Act, responded by stating the vote changes nothing. Folks, I don't know how it's happening. I don't know what is happening down in Olympia, Washington, the capital. But essentially, this tax is coming whether you want it or not. Whether you voted for it or not, it's coming. And it's here. Okay? And again, it doesn't matter who I talk to or what way they vote. No matter what their political ideology, they're going, I don't like this. Okay? It's very burdensome and it was brought upon us even without a vote. Even when the counties did vote, should we repeal this tax? All these counties said, yes, repeal the tax. But the legislators said, sorry. Okay? What are the private long-term care options for opting out? Okay. You can get standalone long-term care. So lump sum or payments over short time span, typically over 10 years. Okay. So you could pay a premium for 10 years to get standalone long-term care. Usually a medical exam is needed. Okay, a medical exam is usually needed in order to be able to qualify for long-term care. All right. You could also opt to get an annuity with long-term care rider. This requires a lump sum payment. So if somebody has 50, 60, 70, $100,000, they could do a lump sum payment to achieve and get the long-term care. Okay. But there's also no medical exam. All right. So basically they're paying a premium, a large lump sum premium to get long-term care coverage to avoid having to have no medical exam. The next option is permanent life insurance with long-term care rider. Okay. So lump sum or payments over a lifetime, that's the option. You could do a lump sum or premium payments over a lifetime. There's a potential for no medical exam if you're healthy enough. Okay. And also there's a lot more benefits, but let's go over a couple of different options here. So this is the nationwide care matters, okay, long-term care benefits for cash indemnity, okay? So a male, 35-year-old, single, non-tobacco, a healthy male, getting a benefit of $250,000, all right? Their monthly scheduled premium will be $149 per month, $149 per month, okay? Now the base and cost of insurance charge is going to be $79. $79 cost of insurance. Okay. There's going to be a death benefit of $71,000. So up here, 71,430, 71,430 with $250,000 of long-term care. Only $250,000 of long-term care. But the cost of insurance, as you can see, is going to increase as this person gets older. By the time they are 64, 65 years old, it's going to be $552 per month in cost of insurance charges. But their death benefit never increases. Their long-term care benefit never increases, neither does their death benefit. So this is just basically a standalone long-term care option, okay, with a death benefit, all right? And they could do it on a monthly basis if they want. They do have to qualify as well, all right? Now, the next option is a permanent life insurance coverage, okay, that will offer not only life insurance coverage, but also long-term care, but also a tax-free income benefit for retirement purposes. So it kind of takes care of multiple things at once. All right. So male, 35-year-old, healthy male, $250,000 of long-term care and life insurance. Okay. So instead of having only $71,000 life insurance, this one actually offers $250,000 of life insurance. $500 per month. A lot sounds like a lot. No, it's not. Okay, because it's also an investment for potential tax-free income for retirement purposes. Okay. And so the long-term care is going to be $250,000. So life insurance, $250,000, long-term care, $250,000, and it's an immediate benefit. It's an immediate benefit once somebody is approved and the policy is issued. Okay. The rider charges, the long-term care rider is $90 a month, $90 a month, $90 a month. The rider charges do not increase as this person grows older. Okay. Their net benefit, their net death benefit does increase as they grow older. Okay. They also have an investment. Okay. Net investment gain or loss inside this benefit as well, inside this policy. But the long-term care costs do not increase as this person grows older. Okay. But look at this as well. Base cost of insurance is going to be $1,100 that year. Okay, $1,100 for cost of life insurance. But look at this. They're going to take out $30,000 in tax-free cash at the age of 65. So that's an extra benefit that this person can actually opt for to actually have inside this policy, an extra $30,000 tax-free cash that they could use for whatever they want. All right. And still have life insurance benefit and long-term care benefit. Okay. The net investment gain or loss that year is going to be $28,347. Okay. And the death benefit is still $636,000. So the $250,000 death benefit does increase over time with this particular policy, how it's structured. Okay. With this policy here, you also have to qualify health-wise. So there's qualifications, there's medical, there's qualifications to make sure you qualify for this policy. But the long-term care rider is going to be $90. The cost of insurance for life insurance is going to be $1,109 at the age of 65. Okay. So the total cost that year for $636,000 life insurance and $250,000 of long-term care. Okay. So it's double benefit. So $636,000 of life insurance and $250,000 of long-term care. The total cost that year is going to be $1,199. Okay. At the age of 65. Let's say this person takes out a tax-free loan of $30,708. And their gains is $28,347 for a total of $59,000 that year that they will be earning or taking out of this policy. If they were to pay taxes on this investment with this money in another investment, those taxes are going to be $14,763. So let me ask a quick question. Would a person rather pay $14,000 in taxes with another type of investment, not this investment, another type of investment, or $11.99 cost of insurance? So the cost of insurance and cost of long-term care is going to be fractional compared to what this person would normally pay with another type of investment. Okay. I know that's a lot. Don't worry. You could actually learn by talking to the person who invited you. Okay. So you could get standalone long-term care with Nationwide. It's $150 a month for $250,000 of long-term care. The annuity long-term care rider, usually like Allianz, you'll get a $250,000 lump sum of cash to purchase a $250,000 long-term care policy. Okay, that's an annuity. Life insurance long-term care rider, Transamerica, okay, one of our providers, is $500 a month for $250,000 long-term care, plus $250,000 of life insurance, plus $30,000 of tax-free retirement cash. Okay, Nationwide is $500 a month for $250,000 and $30,000 tax-free retirement. By the way, that's per year. $30,000 tax-free retirement per year. Okay, so starting age 65, this is $30,000 per year tax-free retirement if you don't use the long-term care or life insurance. Okay, so with the CARES Act, if you don't use it, you lose it. With private long-term care insurance, if you don't use it, a lot of times you'll have return premium. And with the life insurance long-term care rider, not only if you don't use it, do you still have coverage for a lifetime, but also you have $30,000 per year of tax-free retirement benefits. Okay. Now, Mary Jane has been posting up, I believe, in the chat. Mary Jane, post up in the chat, please, the feedback sheet. Okay. Post up in the chat the feedback sheet, please. Okay. And we're also going to unlock the chat room for any questions. Okay. Any questions, please. Let's go ahead and unlock the chat room. Unlock the chat room, please. Okay. Hold on here. All right, hold on, folks. We should be posting up the chat. Mary Jane, unlock the chat, please. There we go. All right, so unlock the chat, please, Mary Jane, so we have any other questions. In the chat is the form for feedback. Please click on that link to give us feedback, okay? And also put down the person who invited you if you have any questions. Mary Jane, go ahead and unlock the chat room for everybody if you can, please. I'm not quite sure if you can or not. To see if there's any questions. Okay, the chat is now open to all. Please put down any questions, and I might be able to answer it here real quick. Good question, Marina. Well, employees need to opt out every year once you get long-term care insurance. If you get private long-term care insurance, you will not need to opt out every year, okay? But if you are enrolled in the tax, you cannot opt out ever, even after you get your long-term care insurance, your private long-term care insurance. Really good question. Any other questions here real quick? Okay. I guess you guys all learned a lot from tonight, all right? I know there's a lot of information, and I appreciate that. So everyone in Washington gets this automatically reduced from their paycheck then. Yes, every W-2 employee, Tina, in Washington, unless they have their own long-term care insurance, their own private long-term care insurance, it will be reduced from their paycheck, every single paycheck. Whether you change employers, will be able to provide a certificate of insurance. Yes, so when you file your taxes, you'll be you'll be given a certificate when you file, by the way, and you must maintain your private long-term care once you get it. So once you get the private long-term care, you must maintain it in order to be able to actually be exempt from the tax. Okay. So yes, Tatiana, most likely you'll have to show proof of insurance every year. So you have to maintain the private insurance. Okay. Yes, Ariel, you have to maintain it. Are there smaller amounts available? Yes. Okay. Now the tax is up to $36,500. So I'm not sure if you could only need that much to opt out. Okay. Most private long-term care insurance is minimum 50,000. Minimum 50,000 for most private long-term care insurance. For private long-term care insurance riders with life insurance, most of the time it's minimum 250,000. Okay. Okay. How does one know that they're not going to use their long-term care insurance and opt out to get the tax-free amount of money? That's a complex question. I'm not fully understanding it, but basically, if you do not use a long-term care at all with the life insurance, lifetime income rider, you could use that tax-free cash whenever you want. Okay. You can use it whenever you want, even before you retire. Okay. So there's a lot of benefits with that permanent life insurance policy with long-term care. Okay. All good questions. Okay. Does that mean if I opt out now and then decline my private long-term care, they will opt me in automatically without an option? Yes. Yes, DK. So if you get a private long-term care policy before and it's implemented before November 1st, and then you discontinue the policy, let's say next year or the year after, you'll be automatically opted back in when you file your taxes, and you won't be able to opt back out at all. Okay, so it'll be beneficial for you to actually get the policy, the private policy, and then keep the policy for the rest of your life in the state of Washington. But it's looking like it's spreading across the United States. Okay. Are there any less costly private plan options for those who just want to not vest with the state? Very good question, Maria. It's going to be case by case basis. And obviously you have to qualify. Okay. But like I said a little bit earlier, the maximum benefit for long-term care is $36,500 in Washington. The private long-term care is usually going to be minimum 50,000. When some cases, sometimes $250,000 in other cases. Okay. How does the Washington state tax show up on the federal tax return? That one I do not know. Okay. My spouse does not work now, but plans to start working in a couple of years. Is that true that she can opt out only this year? Very good question, DK. I'm not 100% sure on that question, but basically anybody who is earning a W-2 will be getting this long-term care. Okay. No matter what year or when. All right. So this is not just a one-time enrollment November 1st. It's after November 1st. If anybody starts a W-2 job, okay. All right. They're going to be rolled into the tax, whether they like it or not. Okay. A very good question is insurability. Let's say somebody is non-insurable and they cannot get their own private long-term care. Okay, the Washington state long-term care policy is automatic. So they don't have to qualify health-wise to be able to get the state-sponsored long-term care coverage. Okay. Good question, Tina. Again, that's case-by-case basis, but all very, very good questions. What I suggest, okay, is making sure that you talk to the person who invited you on to this this webinar. Okay. My phone number, my office phone number, if you have any questions, is 206-268-5530. Mary Jane just posted up the feedback sheet form again. So click on that feedback sheet form and make sure when you fill out the feedback sheet, you put down the person who invited you, so that way we could track it and give proper credit. Okay. So folks, we will be doing this webinar. This is the first of many. We're going to be doing this webinar every 2 weeks, okay? Every 2 weeks, we're going to be doing this webinar until November the 1st. So no matter where we are, no matter what vacation we are on, we're going to be doing this webinar every 2 weeks to get the word out. This was a no obligation webinar. This was just educational purposes only, okay? But it's very important that you very much consider your options on whether you want to stay with a state option or get your own personal option. And by the way, for all my fans here who are not in the state of Washington, okay, it will be coming to your state soon. California is one of the ones that are in line. The process is in line. The process is in process, okay, to actually be implemented. There's many states that they're already in process of getting this started, okay? So don't think it's just gonna be Washington. It's gonna be in many states, including California, including Hawaii, all right? Grant, all right? Mr. Grant Pierce, I love that guy. All right, Mr. Grant Pierce, what about new works? Can they get private long-term care before this tax hits your W-2? That's a great question, Grant. I'm not 100% sure. Make sure that you and I talk privately about that, all right? And folks, I believe that is it. I appreciate your time. I appreciate the feedback already. If you absolutely hated this webinar, if you absolutely hated me, make sure you put that down as well. Okay, I could take it. I won't cry too much, but I appreciate your time. And this is, again, mostly informational. Everything's informational. If you want any additional information, talk to a person who invited you. But our focus is getting the word out to where people actually understand what their options are out there. All right. Thank you very much, folks. Have a great night, and we'll see you in 2 weeks. Bye-bye.